For many of our clients trading across the EU, services are seen as a less complex area from a VAT perspective, particularly as the default services are generally taxable where the customer is established. However, there are certain circumstances whereby complexity can arise, particularly when the supplier is providing services in a jurisdiction other than where it is established. My name is Michelle Lang, and today I'm joined by my colleague Tara Doyle, who's the Senior Manager in our consulting team, and Owen Rogers, a Director in our tax technology team. Tara, perhaps you could maybe talk us through some of the VAT issues arising from default services.
Of course, thanks Michelle. So from a VAT perspective, when we talk about services, we can categorise these into two groups. So we have our exception services and we have our general rule or default services. Now, the exception services tend to have their own specific rules and are often taxed in the member state in which they're provided. And we can also say that anything that's not an exception service would be a general rule service. Now, if we're looking at a B2B scenario for the provision of general rule services, the rule for the taxation of these services is that they're taxable where the customer is established. So if we were to take an example with two domestic companies, so if we had a German supplier and a German customer, there'll be German VAT on that invoice as a domestic supply. Now, if we have a look at the first example that we have what we'd say a cross-border supply of general rule services. And when we say cross-border, we're just talking about from one member state to another. So we have our Belgian supplier, and he's carrying out general rule services for his French customer. Now, when we talk about general rule services, we're looking at services like advertising, marketing, training, these kind of things. So in our example, there's a training service being carried out by the Belgian supplier for his French customer. We saw in the first example with domestic, there was VAT on that. Now in this example, because the customer is established in France, our Belgian supplier will raise a VAT invoice but with no VAT. And that will be from his Belgian VAT ID number to the French VAT ID number of his customer, those being the countries of establishment. The French customer will then self-account for any VAT due on that supply. So the French customer in his French VAT return will have the output due on the service, but at the same time will deduct the input, which is straightforward enough. Now, if we variate this slightly and we have a different example, we still have our Belgian supplier and we still have a training service being carried out with a French customer, but this time the training is taking place in Italy, so outside of the member state of establishment of the customer. Does it change anything for us? It doesn't, because when we revert back to the general rule supply regulations, we will still tax this service in the member state of establishment of the French customer. So really, it's not particularly complex, but from an SAP perspective, I mean, how does SAP deal with this, particularly when we have in this example a training that's taking place outside of the country of establishment of the customer?
Yeah, thanks, Tara. It's a good point. And SAP will struggle a little bit with flexibility when it comes to determining the different types of services and what knock-on effects they have on our invoicing. What happens in SAP is that generally in a sales order, I'm going to create a sales order here, and in the sales order, SAP will get the destination country from the ship-to party. So in this case, I'm going to create a transaction selling standard rate of Meridian services from my Belgium organization. And you'll see here that my sold-to partner, so my actual customer is a French company, but my ship-to location, so where the service is being carried out, is in Italy. So with standard SAP, when the condition record is created, this will be a standard sale of services into Europe, like you mentioned, but there's some key points we need to consider as to what we need to do with the accounting document then and the actual invoice itself. So if we look at the conditions, firstly, you'll see that with the Meridian conditions active, we have a simplification where we will see a sale from Belgium to the EU, because instead of maintaining the countries individually, because the tax code will be the same regardless of the country, it's okay for us to simplify the records by using EU for any countries that are within the EU. The material tax class is the key indicator here. So I have S, which in my system indicates services. So when this type of transaction is created, the Meridian code will automatically determine what is the correct VAT ID to use on our invoice here, because for the reasons you mentioned, that should be France and not Italy. Standard SAP will assume Italy because of the fact that the place of supply is Italy, and would issue that on the billing document. So if I just check here, if we go back into the sales order and quickly create the billing document, you'll see here on the screen, when I look at the header, We don't determine Italy as the destination country, we see France, and that leads us to be able to determine the correct French VAT registration for our customer. So therefore, we don't need to do any manual changes or anything like that. And the reason that's been determined is because this table I'm showing you now allows our customers to identify which material tax classifications allow our system to understand the services that they're selling. So for these examples that you mentioned for default services, we create the material tax classification in this table, and then the system knows it needs to actually look at the country of establishment of the customer rather than just the country where the supply is happening.
Thanks, Owen. Thanks, Tara. As you mentioned, not overly complex from a VAT perspective, but obviously very important from a systems perspective to be able to get the correct VAT ID. That's it for today. If you'd like more information on the Meridian solution, please contact us at meridianglobalservices.com.